You were just saying, what, a week ago, that the market had gotten ahead of itself, was tempting fate, baiting the Fed. Have we gotten enough of an adjustment today, do you think?
So I don't think we got enough. If you look basically the day after Fed, 2-year was about 410. Now it's 470, and Nasdaq is basically flat. So we had sort of 60+ basis points increase in 2-year yield, and Nasdaq just gave back a little bit of the gains from the last few days. But I do think we could see more downward pressure here.
Now, I was a little worried. Well, I still am, of course, a little worried about the market, but more worried until I saw Palo Alto Networks, because it seems that for the essential things, at least enterprise buyers are still buying. It's not all about what we see the consumer doing with Walmart and Home Depot. Is that important at all to pay attention to?
So, that's the one company, and I think here's the bigger question of sort of the level of equity risk premium and sort of multiple for the broad market. So you will have individual companies have a good or bad earnings, but here is more of a question of a sort of what's the right price that you pay for the equity. It's sort of what is the right multiple. And again, multiples tend to go down when the yields go up. So I do think overall this would be sort of different type of the flows. And a little bit like we talked, you will have investors moving into bonds out of equities. You will have some pension fund rebalances, some defined benefit flows from pension fund defined benefit flows. So I do think sort of one company like you mentioned today, I wouldn't think it's going to matter.
So Marco, I mean, you just talked about yields going up and what that does to repricing equities. Do we retest the highs for the 10-year going back to October when you see the move we've had in just the last couple of trading days?
We don't have a very strong view. We made the 10-year rallied a lot. What we have a little bit of an issue is that equity multiple didn't react yet, even for the levels we have now. So even if the bond yields pull back a little bit here, there's still very big gaps sort of what equities are pricing and what bonds are pricing. So I wouldn't think it's going to matter also as much for the equities going forward.